What's up guys, Jake with Sensible Capital. What if I told you that the US might soon join the ranks of countries like Norway and China by creating its own massive investment fund? A US sovereign wealth fund could revolutionize how our nation invests in its future, from cutting-edge technology to critical infrastructure. But is this really the golden opportunity that it seems like? In the next few minutes, we'll go over what sovereign wealth funds are, why the idea is gaining rare bipartisan support in Washington, and what it could mean for your financial future. What are sovereign wealth funds? Sovereign wealth funds, or SWFs, are government-owned investment vehicles that manage a country's excess wealth. You can think of them like giant national piggy banks, investing in everything from stocks and bonds to real estate and private companies you probably never even heard of. Their goal? To protect and grow the nation's wealth for future generations. Now, talk of SWFs has been popping up a lot lately, but the concept isn't anything new. Kuwait actually established the first modern SWF back in 1953 to invest its oil revenues. They wisely recognized the potential risks of relying solely on oil money and saw the fund as an opportunity to simultaneously reduce their reliance on natural resources while also securing the country's financial future. And that foresight has since inspired many other nations to follow suit. But recently, these funds have been making waves in American politics, with both sides of the aisle showing interest. So why the sudden interest in the US? Well, this stems primarily from a few factors. First and foremost, global competition. Unless you've been living under a rock, you know by now that China is by far the biggest economic threat to the US. Its flagship fund, the China Investment Corporation, manages over $1.35 trillion in assets and has spawned multiple other funds with varying investment goals. For policymakers in the US, on the one hand, we've got some pretty serious economic challenges. Rising national debt and questions about continued funding for infrastructure and social programs. While on the other hand, we see countries like Norway, who've had incredible success with their SWF, and think, wow, wouldn't it be nice if we could use one of those neat little funds to take care of that? After all, Norway was able to take their fund, established in 1990, but not even funded until 96, and turn it into the world's largest, worth over $1.6 trillion. To put this into perspective, their fund is so large that it owns almost 1.5% of all of the shares in the world's listed companies. And by spending only the equivalent of the real return on the fund, which is about 3% per year, Norway is able to cover almost 20% of its budget. So yeah, sovereign wealth funds can be pretty awesome. If run properly, they can provide long-term funding for national infrastructure and research, reduce citizens' tax burdens, and even provide an annual dividend to residents, such as Alaska's Permanent Fund, which gave out $1,312 per person in 2023. So if sovereign wealth funds are so great, that begs the question, why hasn't the US already established one? Well, there isn't really any one answer, but a number of factors that stand between the US and a shiny new SWF. Let's briefly touch on three of them. First off, if the US recognizes a need to invest further in a certain area, it doesn't necessarily need a fund to do that. It could just pass bills to legislate it into effect, moving funds as needed to different projects. And second, well, they're kind of complicated. It's not like the US just opens a Robinhood account, throws some Wall Street bets degenerate in front of the screen, and has them bet it all on zero DTE call options for a random earnings play. A large economy establishing an SWF would potentially have a number of geopolitical implications that we don't even realize. And if it isn't structured, managed, and regulated properly, it could open the door for all sorts of trouble. If you want an example of an SWF gone wrong, look no further than the 1MDB scandal, where over $4.5 billion was misappropriated from the Malaysian fund. Now, obviously, I'm not saying that would happen here, but it just goes to show the importance of having proper oversight. And assuming all of that's handled properly, then you have to worry about where to actually put the money. SWF isn't some magical money tree that just keeps growing all on its own. And third, the trillion-dollar question of the day, where's the money going to come from? If you look at most of the world's largest sovereign wealth funds, you'll notice the countries tend to fall neatly into two different categories. Countries with abundant resources, such as oil and natural gas, like Norway and Saudi Arabia, and countries that benefited from the East Asian export boom, like China and Singapore. These countries typically run at a surplus, thus they have extra money to put towards an SWF. The United States is a bit of a different story. The US national debt now stands at over $35 trillion and continues to grow as we continue to operate in a deficit. Right now, this is the biggest question mark for everyone, and probably the biggest hurdle between the US and an SWF. And if you ask Mark Cuban, it's not a hurdle we should try to cross. He tweeted last week, "I hate the idea of a sovereign wealth fund. If the government had a surplus, maybe, but with a deficit, it makes no sense at all." Norway, for example, has a surplus in pretty much every category, and I think they pull money from their oil revenue. Alaska, I think, returns money to citizens, so they have money to invest. That's very different from taxing someone at 10% or more so that you can earn less on the fund. There are tons of ways to generate funds, such as raising taxes or implementing tariffs, but assuming we find a way to fund it, we have to make sure that we aren't just dipping right back into the fund and preventing it from growing. That would defeat the entire purpose. This creates a situation where just because we can doesn't mean that we should. It's imperative that the powers that be consider the opportunity cost of their actions before they take them. Otherwise, we might still end up with a sovereign wealth fund. It just might not be quite what you were expecting. So while the US sovereign wealth fund is a cool idea with potential benefits, it definitely comes with significant challenges and risks. What do you think? Would a sovereign wealth fund be a smart move for the US? Or are there better ways to invest in our future? Or should the government just watch a couple more Best Side Hustle 2024 videos and start drop shipping? Let me know in the comments down below. Don't forget to like, subscribe, and hit the notification bell. Thanks again for watching, and always remember to be sensible.